what you're about to watch today is a professional investor go from 100% in cash to 100% invested into the market. We're going to be covering a lot. I'm going to show you my entire process, top to bottom, and you're going to have the opportunity to ask questions as we go along. But please accept my apologies in advance if I don't get a chance to answer your questions as we go. We have a lot of trades to put on today. It's probably either going to be 8 or 9, maybe more, maybe less, depending on what the market is giving us. But we're going to go through every single step of the process, and I'm going to show you everything. So if that sounds good, you are in the right place. So let me introduce myself real quick. My name is Christopher Ewell. So I share my screen. There we go. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009. And this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already, because we do this live every chance we get. Right. There are plenty of times during the year where there's nothing to do. But on a day like today, hold tight real quick. On a day like today, we go from all cash. I'm sorry, I'm trying to show you something real quick. We go from all cash to all invested. So this is what my portfolio looks like right now. Every single one of these trades was an outlier trade, was an outlier signal. So we're going to be making even more outlier moves today. Hope you are excited about that, because I know I am. So let's get busy. All right. So where's the slide that I want to see real quick? What is outlier and how does it work? Well, old Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. Outlier shows you if investors are acting rationally fearful or greedy and by how much, allowing you to get into the stock before the outlier move happens. And if you're ready to save time, make money, and start winning with less risk, it is just 3 easy steps. Step 1, head on over to OVTLYR.com, grab the annual pass for just 82 cents a day. Or if you're on the monthly plan, click the 64 or save 64% button to upgrade with 1 click. Step 2, start using the OVTLYR 9, which we are using today. Start using the OVTLYR 9, the objective, data-driven approach to know if your stocks are set up. And step 3 is sit back and relax, because you just found the easiest way to save time, make money, and start winning with less risk. Now, my style of trading using the outlier is called the golden ticket trading strategy. And it starts with letting the market tell us what it's doing, right? We need to be listening to the market. Do not tell the market what it needs to do. Listen to what the market is telling you. All right, so first, we're going to go with the market signals here, right? The slingshot setup here inside of the golden ticket trading strategy is all about going with the market, with the sector, with the stock. And 40% of the move is due to the sector, due to the market, 30% due to the sector, 30% due to the stock itself. So let's go see the trend of the market right now. We established a trend with the 10 over the 20, price over the 50 daily exponential moving average. So if we go over to the SPY, which is what we see right here, we have the 10 over the 20, price over the 50. This is a bullish trend right here, hands down, no joke. Cannot argue with me, because it is just math. This is a bullish trend. Okay. Next, the next thing we need to look at is the signal of the market. And if we go into outlier, we can actually see that we are sitting on a fresh, hot and fresh out the kitchen buy signal today on the SPY. So let's just pop that open real quick and take a look at it. And we'll zoom into the 3-month chart once that pulls up here. Here we go. So buy signal came through today. That is exactly what we're looking for. Next, we need to look at the breadth of the market. Now, breadth measures how many buy and sell signals we have. So let me show you what that means. So breadth, how we measure it here at Outlier, is how many stocks have the buy signal versus how many stocks have a sell signal. Like today, we have 356 buy signals, brand new buy signals today, 356, where there's only 93 sell signals that came through today. So how do you measure that over time? We have a breadth chart over here. Now, if we scroll over and look at this point right here, the green line is measuring the percentage of stocks that we cover with buy signals. The red line is the 10 EMA of that percentage number right there, okay? And we have a bullish cross as of today on the full stocks. All right, so this now has green, green, green. Everything that we need to see for the market to be set up is lit up in the OVTLYR 9. Step 2 is to look at the sector. Now, we don't have to go into section 2 in the PowerPoint because this talks about exits. So we're going to skip over to section 3 in the PowerPoint. What are the sectors telling us? We do that by looking at the fear and greed and the breadth of each sector. Makes it super easy to look at breadth right here. The crossover point that we just looked at on the all stocks, on the full stocks, is actually represented here on the left-hand side for the different sectors. So you don't have to click in each one. You can actually see them all at one glance. We have 8 of 11 sectors that have bullish crossovers. There are 2 on here, S&P 500 and Dow Jones, that aren't a sector. But what we want to see here is all of these sectors lit up. Not all of them are green, and that's totally fine. Not all of them are bullish, and that's totally fine. We just aren't going to trade those 3 sectors, okay? So the next step, right, note which sectors have bullish and bearish breadth, is to run the screener. Now, this is my screener criteria right here. By all means, take a screenshot and come back to this later because we're going to be moving very, very fast. When I run my screener, I filtered it to be just those sectors we saw that were bullish, and then positive returns greater than 1 million average daily volume with the current buy signal. The market cap, I don't care, anybody, over $20 because I'm a snob. The fear and greed heat map goes from 0 to 90. This is measuring if it is fearful, greedy, and how fearful or greedy it is. With that heat map, we want to see it moving up, moving more greedy, of course. And then the overlay indicator, what that is showing you right here on the stock, if it has a 10 over 20 price over 50. That green overlay is what this is representing right here with uptrend indicator. When I run this, I got a hell of a lot. The way that I trade is I will look for a today buy signal or a yesterday buy signal. And I'm telling you, it was a buttload. I had to go down here and hit load more. And it continued on and there, all the way down to there. So I don't know how many that was, but I mean, you can just see that's a buttload, right? That is so many stocks to choose from. How do you even filter this down? What do you even do at this point? This is where having a plan really, really helps. Okay. So the next thing we need to do is that's a bearish screener. Pick one stock from each sector and look at the sector fear and greed and see if it's increasing in a bull market. Eliminate any sectors that don't match that criteria, and then you can rerun the scanner. For the sake of time, I'll let you know right now, all of the 8 sectors that have bullish breadth, all of those 8 sectors have bullish fear and greed. Yes, Bender says a buttload equals lots of money. All of them have bullish fear and greed. So let me show you where that is here in OVTLYR. This is the industrial sector. So you can see the industrial sector was getting less and less greedy over time, moving more and more towards the fear. Bottomed yesterday. This is basically a story for everybody. Bottomed yesterday and is now starting to move back up. You can see the greed value went from 57.21 to 57.34. This is the average of all the stocks in the industrial sector, the individual stocks fear and greed. This is what that is measuring here. This is the breadth down here. If this has this crossover that we mentioned just a moment ago that you can see in the breadth over here, this industrials value, if you clicked on that, would be the exact same chart as this. This green and red background right here is showing you exactly the same as what's on the breadth tab for how many stocks are in a bullish uptrend with the green overlays or in a bearish downtrend with the red overlays. That's what that represents right here. So every sector of the 8 that has bullish breadth has bullish fear and greed. Let's go. Let's do this, right? So we're completely lit up on the market. We're completely lit up in all the sectors, all 8 of the sectors that are bullish on the breadth. Now, what are the stocks telling us? We're moving into section 4. What are the stocks telling us, right? So we're going to look at the individual stocks to come up with these values here. Now, we had like 300 something, it looked like. It was an astronomical amount. Ain't nobody got time for that, right? Especially on a YouTube video like this, right? So the things that I do are this. I look at what stocks are left, and these are the best stocks in the market as of today. I'm looking at only the today and yesterday signals. And next, we review the charts. Now, this actually took me some time today. I sat down and I started combing through the charts. And yes, there's probably a faster way to do this, but that's okay, right? I made my list. I was running through here and I was marking ones, like all these purple ones that I have marked over here. I'll just pop these up for you. Have an order block in our way. We don't want to trade with order blocks, right? So I went through and I measured all these. And if they had an order block in our way, I marked them as not interested, okay? What's left, I made sure that there were no order blocks in our way, no earnings the next 3 days, and above the price above the 10 EMA, and also the price above the prior day's low. So when I ran through all of this, it was a lot of work, and I came up with this list here. Celsius, Morgan Stanley, KKR. What is KKR? KKR. Capital One Finance, SMTG, SMTC, I should say, Simtech, Frog, JFrog Limited. I don't know what that is. PayPal. Okay, PayPal earlier I wasn't sure about because it was actually slightly almost closing under the previous day's low, but we're good there now. CSCO, Cisco, Snowflake, and Twilio. Right, so these are the stocks that I'm interested in trading today. Now, I went and I did a lot of work earlier, right? And I boiled it down to these are the strikes that I'm interested in buying today. Now, how do you get to this point, right? So you start with the highest backtest and work your way down. Now, you're lucky because I did all the work for you, but if you're doing this as well, you can see the backtest results right here inside of OVTLYR. These backtests are showing you exactly the buy and sell signals inside of OVTLYR, how they have performed over time. Just the buy and sell signals. That doesn't even include having the OVTLYR 9 layered on top of it, having the full market momentum breadth working behind you, okay? So I started with the highest backtest and worked our way down. In fact, Celsius, that one right there, is on the top of my list right here. And then going into each individual one, confirming the OVTLYR 9 is 100% set up, and then starting at 21 days to expiration, looking at 250 plus open interest, looking at less than 50 cent bid-ask spread, 20% or less extrinsic value, puts us around the 80 delta. And on my spreadsheet here, I put in which expiration, the OVTLYR returns, the delta, the extrinsic value. So we could make that calculation here. Now you'll see this one here, it says 27%. I'm going to fudge on that one a little bit. It'll give us another trade that we can take. Plus, it's $1.92 per, so it's not very expensive. And then the strike price and the options price. So we've done a lot of work ahead of time to make things a lot easier for us, okay? So the next step is only proceed if OVTLYR 9 is 100% set up. Only proceed if OVTLYR 9 is 100% set up. And we need to remind ourselves of a few trading psychology-based things, right? A few trading psychology-based lessons here. Number one, we're about to put these trades on. I don't know the size of your account. You don't know the size of my account. But I'm going to tell you one thing. I'm going to be buying a lot of call options. But I don't have any expectation of what the outcome of this trade will be. Any one of these trades. I don't know what the outcome will be. I can't put an expectation on it. I can't set a profit target on any of these because it doesn't matter. My profit target could be $50 off from what your profit target is. Does that make either one of us more correct? No, it makes us both wrong. It makes us both equally wrong because neither one of us are going to see our profit target come to fruition because we don't have a magic ball, right? Then as far as when to get out, that's where a lot of people struggle in the market. They have no idea where they're going to get out, but we do. We will talk about where we're getting in and where we're getting out here in just a couple of minutes. And you must have that plan to get out exactly before you start getting into the trades. I know it's fun and exciting and sexy, and this is the best part of trading is getting into a trade, but you're not going to get paid until you close those trades. All right? There's a lot of people who held Tesla all the way up and all the way down this 124% move. There are a lot of people who did this. If you're guilty of this, no shame in it. It happens. You may not have had a plan in place, but we're going to rectify that right now, and it's never going to happen to you again. How's that sound? But before we do that, let's get into today's member highlight. Did you like how I teased that? I was like, okay, I'm going to make sure that everybody gets super stoked, super ready to trade, and then we're going to shift gears over to today's member highlight. Oh yeah. So let's jump into our Discord, and we have a section in our Discord called Share Your Big Wins. And so what I want to do here is just pick out a couple people who have done an incredible job, like Hallandry, right? Picked up AMD yesterday and sold this morning for $11.20, and he made a 34% gain. How cool is that? J Duck is talking about when luck is when preparation meets opportunity, right? A random guy talks about Gary Player once saying, the more I practice, the luckier I get. We are doing our absolute best to help you make as much as you possibly can in the market, helping you save time, make money, and start winning with less risk. And I love how you guys continue to show how you are doing. Like Carol, she's up 42% year to date. She's beaten me. Carol is up 42% year to date. So congratulations, Carol. I am super, super stoked for what everybody's doing out there, right? Y'all are killing it. We're about to be making a whole helping whole heap and helping more trades, right? So go ahead and tell me your success stories in the chat. I would love to hear from you. And of course, the way that you can pay me back is by telling everyone about Outlier. And that's the first rule of Outlier. Tell everybody you know. So let's take a look. Y'all ready? Enough stalling. Enough stalling. Let's go to the slide here. Remember, only proceed if OVTLYR 9 is 100% set up. We've gone through our trading psychology. We understand we don't have any expectations on the trade. We don't have any profit targets. We are just going to follow the plan when we have one of our exit signals hit. And lastly, calculate your position sizing. Okay. Your position sizing cannot be the same on all of these. It cannot be, unless you're buying one, right? Because then what's the minimum you can do is one. But in this case, you've got to be able to position size correctly for each one of these trades. This is the formula to do that. Now, I've made it easy for you if you are an outlier. I have a spreadsheet that does all the work for you up here in the VIP Investors Toolkit. There is a link called Position Sizing Spreadsheet. Where is it at? Hang on real quick. You need to grab this. Sorry, hang on. It's been a minute since. Here you go. Portfolio sizing spreadsheet. Grab a copy of that. Now, this is super important, right? Because what I'm going to show you is if you had a $100,000 account and you wanted to risk 5% per trade, that's going to give you very vastly different results amongst all these different trades, right? So if we zoom in a little bit to make it a little bit easier for you to see, right? With the same amount of total risk, you could have all kinds of different option sizes: 2, 1, 17, 22, 19, 23, 4, 9, 20. The reason being that we do this is we want to be trading risk first. We are defining our risk in the trade so that no matter what, we can survive. Okay. And of course, we're going to trade as big as we possibly can with keeping our stops as close as possible. So let's do this. All right. The first one up on the board is going to be Celsius. Right. Enough jibber jabber. Let's get busy. Let's go to Celsius. I'm looking at the July 18th. Celsius. By the way, I've seen lots of comments about Jeremy stocks and whatever, right? Bro, I tell you all this all the time. All stocks are bad, but every once in a while they act right. Your choice is to buy it when it's not acting right or buy it when it is acting right, right? This is a Jeremy stock. Is what it is. I'm going to buy it, buy the call options. I'm going to make my money and I'm going to get out of the way. The last thing that I'm going to do is hold it and watch it go down or hold on to it longer than I need to. No. We're going to get busy. So I'm looking at the 40 strike on July 18th. This made it so much easier now that I've got these notes ahead of me, right? The 40 strike on July 18th. Looking at these here, this is a 5-cent bid-ask spread. So let's go back up to here. 5-cent bid-ask spread. Tons of open interest. I don't know if you saw that. 34,000 open interest. 20% or less extrinsic value. I did the math earlier. It's about 13% extrinsic value. And that's usually the 80 delta, and this is the 82.69 delta. So get your position sizing, and this is where I'm going to start making trades. So I'm going to go on my other screen in the business account and go to Celsius. I'm going to go to the July 18th. I'm going to go to the 40 strike. I'm going to get my position size. All right. I'm going to type that in over here. Oh, wait, I don't want to buy any shares. Hang on. Figure that out. That was an accident. All right. Get my position size. And then let's see where we can get filled. I'm going to start off at 575. See if I can get filled. All right, running the trade. It's filling right now. Average cost was 575. I'm going to switch because I manage 2 accounts to my other account and get that position size. Put on a second one for 575. And working 575 right now. Filled at 575. So I am in Celsius. So I'm going to go into Discord and I'm going to keep all the records right here so you guys can keep track of what we're doing as well. OVTLYR Trading Room. Okay, so let me get some templates going on here. Hold tight. See, we got lots of time. We have 40 minutes. We have lots of time before the market close. All right, trade number 1. Here we go. Copy that. Okay, so today is the 25th. Trade number 1, bought the July 18th Celsius, 40 calls, and I got filled at, was it 575? Yeah, filled at 575. And Celsius is currently trading at 45.14. 45.14 on Celsius is the current price. Okay, trade number 1. Oh, wait. I need to tag everybody on these, don't I? Okay. All right. Trade number 1 is in the books. We have 7 or 8 more to go. Let's go to the next one on my list. That is Morgan Stanley. Let's go look at Morgan Stanley's options chain. July 18th. Go to my list over here. July 18th, 130 strike. July 18th, 130 strike. Man, this just make my life so much easier. Okay, this is a nickel wide. The open interest is 4,600. The extrinsic value is about 22%. I can live with that. 25 or 20%, give or take, is where I start at. Okay, I don't want to pay any more than I have to. Of course, this one I'm going to pay up a little bit. That's okay. But others I'm paying down a lot. Right. So we're going to make it even. Okay. So the 130 strike on Morgan Stanley on July 18th, a nickel wide, plenty of open interest. All right, I'm going to go to my business account and put that in. So Morgan Stanley, get your position sizing. Okay. July 18th, 130 strike. Position sized. Okay. And probably going to have to go to 955. So I'll just start there. All right. Filled 953 was my fill price. Let me go into the other account. Do that one real quick. All right, Morgan Stanley, that one's filled at 955. So we're going to use 953. That's where I got filled the first time. Okay, here, trade number 2. Bought the 718 Morgan Stanley. That was the 130 strike for 953. And Morgan Stanley is currently trading at 137.65. Well, 664, but we'll do 137.64. 137.64. Okay. That was 953. Yeah. Trade number 2. Let's do trade number 3. Now, like I said, we have a lot to do today. So I apologize for going quickly. I know that I'm not giving a lot of education in this. This is an execution type of day, not necessarily so much a education type of day. But I'm glad you're along for the ride. Let's keep going here. We've got Celsius, we've got Morgan Stanley. Let's look at KKR next, the 120 strike. These are all going to be July 18th. The 120 strike on KKR. All right, so the 120 strike is 78 delta, 554 open interest, 10 cents wide. Let me go to KKR, business account, July 18th, 120 strike, and get your position sizing. Okay, I'm running that at 1035. I'll probably have to bump that up to 1040. Let me replace that with the 1040. Okay, there we go. Filled 1040. All right. First account filled at 1040. Let me go to my second account here. Okay. Go. All right, second account filled at 1040. All right. All right, trade number 3. Bought the 718 KKR 120 strike. for 1040. And trading at KKR is currently at 128.70. I've totally spaced out. I'm saying Discord. Okay. 128.70. Okay. Let's go to the next one here. Now, I know that I'm going fast, but doesn't it help to know? Doesn't it help to know the plan? You know exactly what we're going to do. We understand the objective here is to put on these trades. We know exactly what strikes we're looking for. We know exactly what liquidity we're looking for. It just makes life a lot easier. We've got a plan, right? And we're just working on the entry plan. We still have to work on the exit plan, getting that all lined up so we know exactly what we're going to be doing in a little bit. Okay. So don't be discouraged. Listen, if you want to be successful in this game, you're going to have to put in the work, right? You're going to have to put in the work to study, the work to understand, and the preparation so that when it's time to execute, like today, you're not confused. You're not wondering what to do. All you have to do is execute. Makes your life so much easier. But Bjorn says, my expectation on these trades is to have no expectations. Dude, that's so hard to do. It really, really, really is. All right, let's go to Capital One Finance. We're looking at the 195 strike on Capital One. COF. The 195 strike here. That is wide AF. Oh, wait. This is one that was weird. I don't know why there are two July 18ths. I do not know. This could be a quarterly, but usually they're on the same one. So we're not gonna trade this July 18th. We're gonna trade this July 18th. Do me a favor on your broker platform. Yeah. Scott says it's so wide. I didn't take it, dude. For sure not. Go over here to this other July 18th. Then it should be there. Right? That's what you want to see. The 195 right there, 10 cents wide. I don't know why there's two. That's so weird. All right. So looking at this, yeah, I don't know. This just popped open about 40 cents. It was 10 cents wide a second ago. We'll let that settle down a moment. There, it's back to 10 cents, give or take. We're looking at the Capital One, July 18th with liquidity, 195 calls. Okay. So I'm going to go on my other screen. Capital One, July 18th, 195 with the liquidity. Get your position sizing. Okay. And let me try putting it in at 1510 where we get filled. 1510 on this one. Build at 15. Okay, cool. Build at 15. Let me do the second account real quick. Build at 15 on that one. And go to the second account. Build at 15 as well. Okay, cool. Let's put this one in. Trade number 4. This was Capital One, COIF, 195 calls for 15 on the dot. When trading at Capital One is currently at 286, 207.84 is what it was, 207.84. All right, moving on. Okay, next one. SMTC, we're looking at the 38 calls. SMTC, 38 calls. All right, so this is the SMTC 38 calls on July 18th. 38 calls, that's 20 cents wide. Plenty of liquidity here, 83 delta. So let's go July 18th, 38 calls on SMTC. Going into the other screen. Told you guys we had a lot to do today. This is how it's done. This is when preparation meets opportunity, as they say. SMTC, get your position size on the 38 calls. And I'll probably have to put 710, $7.10. Okay, it's filling. Finally filled. What was my average fill price? 710. Okay. Doing my other account. at 710 is where I'm putting in that order. Filled at 710. Cool. We're in SMTC. We're up to the 5th trade. We got lots of time, no stress. This was this SMTC. This was the 38 calls. And I bought them for $7.10. That's an expensive option for a $38 stock. Trading at, well, not exactly 38. What is it? It's $44 stock. Okay, 44.44. Lucky time. At my house, we have this thing we call Lucky Time. I'm sure you've heard of Lucky Time. You know, 111, 222, 323. Lucky Time at our house is crazy. There was one day I was bringing my son home from school, and it was like 4:44 or whatever when I picked him up. And like we just started horseplaying in the car because I was like, oh, it's Lucky Time. Not so lucky for you. And I started, horseplaying with my son in the car. And that has become like a new family tradition. And at 1:11 today, I got absolutely destroyed by my children. Like they were punching me so hard, and I had the worst cramp in my side. And I was like, "Stop! Stop! Stop!" Oh my gosh, we have such a fun time at Lucky Time. So yeah, Lucky Time on SMTC. All right, let's go to Frog. We're looking at the 37.5 strike on Frog. 37.5 strike, 10 cents wide, plenty of liquidity, 87 delta. Should be good to go here. Frog. Get your position sizing. So I'm gonna go to my other screen. Frog, July 18th, 37.5. Position size. Okay. Give me a moment. I'm gonna start it at 650. Filled at 644. Nice fill on that one, actually. Okay, let me go to my other account. Oh wait, I don't know if I did the right number. I did. Okay. Thought I had the wrong number of contracts for a moment. So this is Frog. In my second account. Trying it at 650 again. What you are witnessing is a man with a plan. Man with a plan to make his trades. That has not been filled. I may need to push that one up. Not filled at 650. Let me replace that with 655. Got a really strong fill on that first one. Y'all quit buying these for a moment. I gotta buy them too. Cut it out. Let me replace that at 660. Okay, filling at 660 there. Oh man, one of my accounts got in at 644. The other account got in at 660. That is the power of outliers. All right, you guys are actually pushing the price up in the middle of it. Pretty cool, right? Okay. So we've done 1, 2, 3, 4, 5, 6 trades so far. Let's fill in the details for Frog. Such a goofy stock name, but it's fun. Trade number 6. Bought the same. They're all in the same expiration, so it makes it easier. Frog. This was, let me go to my activity. I got a great fill at 644. That was the 37.5s. For 644. Frog is currently at 43.63. Okay, cool. Let's keep going. I still have capital left. Do you still have capital left? That's the question here. Wait, how'd you get Frog at 6? You might have been on a different strike than me. Just putting that out there. Let's keep going. The next one we did Frog is PayPal. Now PayPal is a little bit wonky. Let's go see if PayPal is ready for us. We'll come back to Outlier Dashboard in a minute. Let's go look at PayPal. PayPal's going to work. Okay, PayPal was the one I was not sure about. PayPal was the one I was not sure about because it was down here when I was looking at it earlier, but PayPal looks a lot better right now. Okay, let's go to PayPal. And let's look at the option strike on PayPal that we talked about earlier was the 67.5s. 67.5s. Same expiration, 67 and a halves. Plenty of liquidity here. Very tight, 5 cents wide. Let's go to PayPal. July 18th, 67 and a halves. And get your position sizing on PayPal. Let's see. I'm going to put it in at 640. See if I can get filled. Run that. Okay, I'm getting filled right now. Right away. 640 was my fill price. Let me do the second account on PayPal. 640. Switch accounts. Filled at 640. Okay, so I am really close to being all the way in. I don't think I have enough to make another trade. Not at the right position size that I need. So that's going to put me, I'm like 97% in right now. Let's just see if I have enough capital. Let's just see. I don't know if I do, at least for the right position sizing. I'm not going to take a trade if I don't have enough position sizing. I'll just skip that one. But let's see if we have enough to make Cisco happen. CSCO. The 67 strike. Figure this here. 67 strike. Lots of open interest. 5 cents wide. See how many I can get. Oh, I could do that. I could just max it out on that one, but it wouldn't be the right position size. I'd even hate to take that. CSCO. July 18th. This is the 67s. All right, if I get the right position size, let's see if I can get filled. It's probably going to balk at me, so you don't have enough capital. No, I don't. How many could I get? How many could I get? Let me do some math here real quick. Hold tight. Hold tight. Nowhere close. Like 1/7 what I need. Yeah. Okay. No. So that's going to be it. That was how many trades? How many trades was that today? Now we're not done. We're not done. Oh, I didn't put in PayPal. My bad. Let me add PayPal real quick over here. Sorry. PayPal. I got filled at, I forget, 640. So trade number 7. I bought the 718 PayPal. Which strike was this? That was the 67 and a halves. Filled at 640. PayPal's current price is 73.19. Okay, cool. So half the battle is done. Half the battle is done. Half the battle is done. We did a lot of work right there. Okay. I want you to take a moment. Take a moment. Stretch out a little bit, okay? We just put on 7 trades. I literally am 97% in, maybe 98. That was a buttload of work, right? Take a moment to breathe, and then we're going to start going through the charts, and we are going to go through the charts and mark where we're going to where we're going to get out, right? That was all fun and games to get in. Now, what in the wide world of sports are you planning to do to get out? You tell me. You tell me. Oh, Dorma says after 6 months of paper trading, the first time doing real money trades. Exciting. Exciting. Max says, I did all your trades, just too short in PayPal. Very cool. Yeah, like I say, I would have got that last one too, but I would have had literally 1/7 the size that I need. Not going to work. Way to go, Dormith. Glad to hear that. And Thomas is giving you some congratulations as well. Thanks, Thomas. You're awesome. Golden Oli says I'm 97% in. I'll keep the spare for a Guinness in case I need one. All right, so that was fun. Now, what in the wide world of sports do you think you're going to do with all this? What do you think you're going to be doing? Okay. Antonio says, question, Chris, should we have some settle cash to roll the position? Will it be a problem if I use 100% of the portfolio? Actually, fantastic question. Fantastic question. Let's go back to this. Now, when we need to roll these, which we'll establish where those points are in a moment, can we roll up for a credit? when you roll up for a credit, you won't need any extra cash. You'll actually get cash back into your account, which is the best part about rolling, right? You're going to take partial profits when you do the roll, not now. When you do the roll, you'll take partial profits and put that back in your portfolio, and then you could actually put on more trades. Pretty sick, right? Pretty sick. No, Dormant, there is no hope and pray, right? Hope and pray would be equivalent to driving from Dallas to Disney World without a map. You driving from Dallas to Disney World without a map? I sure am not. I sure am not. No. You got to drive from Dallas to Disney World with a map. Then, because you have the map, which we're going to talk about the exits here, you can drive down the highway and know which exit to take along the way, right? Makes it super easy. Makes it super easy. Does that mean you're going to be guaranteed any wins? No. But you've got everything in your favor. Everything in your favor. Ryan, listen, dude, thanks so much for the super chat, but I want you to know you're never, ever obligated. I never want you guys to feel like you need to send me a super chat. I do this because I love the game and I love being able to share this with you. Hearing all these big winners that you guys share all the time is so cool, right? I know that's why God put me on earth, is to help people learn how to trade. I can tell you that. I've been saying that for a decade at this point. I've made 2,000 plus videos on YouTube and you guys just found me. So Ryan, thank you for that, but I never want you guys to feel obligated to send any super chats. Gregor says, how do you check if you're within your funds available? Maintenance margin? I don't do margin. I will not do margin. No way. What I look at is cash. How much available cash does my broker allow me to trade with? Because if you look over on your inside your portfolio, it's going to give you a different number for what cash you have versus what margin they're going to allow you to take, right? You're going to pay interest on that margin, which sucks. I wouldn't do that. Let me see if there are any other questions before we jump. I know there's been lots of questions. And like I said at the beginning of this, I apologize for not being able to go through all that. Manny, one of our friends, Manny, Chris, for those of us who have money, can you help us finish the options trades? What do you mean? For those of us who have money. Here you go, Manny. I guess this is what you're asking for. What other trades would I be taking? Like I say, these were backups in case PayPal didn't work. But PayPal worked, so I didn't have to take any of these. Manny, do me a favor, maybe take a screenshot of this, but these would be the ones that I would be looking at. And this one, in fact, is really inexpensive. But like I say, I would only be able to get about 7 times less than I need in my trade, so it wasn't even worth it. Skinny buff guy, took all 10. It's my biggest portfolio size yet, 25%. Actually, that's a great point. I should have mentioned this earlier. I trade a very large position size. I trade at 7% risk. I don't want you to trade that big. Not at all. That's not 7% of my portfolio. That's 7% risk. Some of these trades are 14% of my portfolio, 16% of my portfolio. 7% risk is what I put on. I don't ever want you to trade that big. Not until you know what you're doing. Eric has a great question. Bugster, I believe his granddaughter had a fantastic question. How much does OVTLYR cost? Well, OVTLYR costs just 82 cents a day if you take the annual pass. And if you're on the monthly plan, you can upgrade with one single click and save 64% off the regular monthly price. Thank you for that. Thank you for that. All right, let's start marking up those charts, right? That was fun and exciting. Now let's plan on getting out. Let me save this here because this was a fun little spreadsheet I'm going to keep up in the future. Yes, please. All right, so let's start at the top here. Celsius. All right, first thing to do is add a vertical line for today. This is where we are today. Right? We don't know where it's going to be in the future, but this is where we are today. Next, 575, 45.14. I like to mark on here where I got in. And actually, this is going to be a little helpful thing here. Bullish ATR levels. Okay, so 45.14 is where we got in. We got a little template that I can apply. Opening 45.14 is where it went in. 45.14. Okay. Now we need to mark up a half ATR from entry as our exit point. Right there. Half ATR down, that's our exit point. Now we need to mark up 1 ATR above because this is where we'd look to roll those options. If we can roll for a credit, it's a very defensive and offensive move. It is so awesome to do. And then a second one up here for that. Now, one thing we don't have is we don't have the outlier data on this yet. So let's go do this. Let's go do this. Where in the Discord will you update us on the trade status? So for those of you who don't have access to our Discord, if you just head over to outlier.com, there's actually a Discord button right here. Let me turn this off for a moment. There's actually a Discord button right here. That'll pop you over into our Discord platform. You'll also get an email once you set up how to access it. But here we go to Outlier Trading Room. This is where all my trades go. Nobody has access to this except the mods. And so it stays very, very clean. Nobody's allowed to make any trades in or make any posts in here except the mods, and that includes me. So let's go to Celsius's data here. Now let's talk about our exit signals. Let's talk about our exit signals. Let's go to the exit signals section. Right. Before we add any new trades, I always look to reduce risk. So first thing we need to say is, where would our exits be? On the market, a SPY closing under the 20 EMA, close all the trades, no matter what. If the sector and the market breadth both cross over, close all the trades in that sector. We're not going to have to worry about that on any of these right now at least. So let's focus in on our chart exits. Half ATR, we got that. We're not going to have to see any of these for today. These are all the exit points we'll cover in the future. But for right now, we're just marking up our charts. So then the things we are going to need to look for are sell signals or our fear and greed heat map target. So what does that mean? If we go into Outlier, we can see this value right here is the fear and greed heat map for Celsius. And as you can see, it's actually higher than it was yesterday. 68.23 yesterday, 68.29 today. Slightly higher, slightly higher. Remember earlier we talked about the sector breadth and the sector fear and greed, and we can see just right here that is getting slightly higher. So the value of it is 68. So for me, when I see it's between 50 and 75, like this one would be, I give it a 10-point spread. So my cylinder strength would be exit at, here we go, exit at 68 plus 10, that would be 78. So we'll just type in 78. Exit at 78 heat map. Oh, let's do it this way. Heat map exit at 78. I like that. Heat map exit at 78. That's very simple, very clear. Let's take these off here. Now, we know exactly what we're going to do on Celsius, right? How cool is that? No issues here. We know exactly what we're going to do on Celsius. No matter what, we have a plan to get out. Let's go to our next trade. That was Morgan Stanley. Okay, let's pop a lineup for today. Let's pop our bullish ATR levels on here. We got in at 137.64. Opening here. Pop this over 137.64. Okay. And a half ATR down puts us at here. An ATR up puts us up here. And another ATR up puts us up here. All right. And so we can take this guy off and we can see right here. That's the plan. Let's go over to Morgan Stanley, see what that heat map value will be. All right, so we're looking at what kind of spread on this one. So it's currently at 53.66. Yesterday was 53.24. Today's 53.66. So here, I give it another 10-point spread. So I would put that at 63. That's 63 on Morgan Stanley. Add my text here. Heat map exit at 63. Pretty cool, right? We know what to do. Let's go to the next one. Now, what I'd like to do here in just a moment is start going through all the Q&A that you guys have on these trades. But do me a favor, this will really help me out as I'm looking through the chat. Type hashtag Q with your questions in the chat. That way it'll be easier for me to find as we go. All right, let's go to the next one here, which is KKR. KKR. Got in today. Add my bullish ATR levels on here. This is my opening here on KKR. And that was a value of 128.70. Okay. One ATR up here. Another ATR up here. Now remember, we put those on there so we'll know when it's time to roll our options when we get to that point, okay? Half ATR below, right here. Cool. So let's go see our heat map target on KKR. Rejo, I appreciate you, my man. You do all this with 40% of your hair, your randomness, your cease and desist. Thank you for the cease and desist reminder. And you don't even have a talking cat. Dude, those are some deep cuts right there. I appreciate that. That's really good. Okay. Fear and Greed down here is at 44.85 today. 44.85. So on my exits here, because it's under 50, exiting at 63. Every time 63 is our target here. And we'll do this heat map exit at 63. Super easy on KKR. All right, let's go to the next one. Let's go to Capital One Finance. All right, we got into Capital One today. Come on, clicky today. Here we go. Bullish ATR levels. Got in Capital One at 207.84. So let's add this here with our opening 207.84. Oh, nice. 207.84. Okay. One ATR up. Two ATR up. And then 1/2 ATR down. Okay, very cool. Now we take that off and we put on our heat map value on Capital One Finance. Dave says, I need aspirin. What a day. I know. This is why I do so much that I can to teach you ahead of time. Because on a day like today, this is not an education day. This is an execution day. It's equivalent to like a doctor going through medical school, practicing on all the cadavers, doing all that stuff to be ready for the day he walks into brain surgery. He knows exactly what he needs to do. You guys just saw me perform brain surgery, if you want to think of it that way. And I know that it's going to look complicated, and I know that it looks hard. I understand. But the more and more you do it, the more you're exposed to it, the easier it's going to get. I promise you that. So the heat map value today is at 62.99. I'm still going to leave that at 62. And we're going to come up here and we're going to say heat map exit 72. Right? Remember, we're giving it a 10-point spread. 10-point spread because it was at 62. All right, let's go to the next one. SMTC. This is number 5 out of 7. 5 out of 7. SMTC. Where are we going to get out of SMTC? I don't know. You tell me. Right? This is today. And we got in at SMTC at 44.44. That's right. This was the lucky time one. This was the lucky time one. Let's do this at our bullish ATR levels. 44.44. 44.44. One ATR above is this here. 2 ATR above is this here. And then a 1/2 ATR below is this here. Let's go to the heat map, SMTC. Kevin says he was able to keep up with the trades. Second time trading. Yay, Chris. Thanks. You are welcome. Congratulations for that. That was awesome, dude. I'm really proud of you. All right. Heat map exit on SMTC. It's at 62.30 right now. So it'll be at 72. Remember, a 10-point spread at this point here. So we're trying to get in on the heat map going up without getting too far to where it can snap back. Right? We don't want the greed to be overly greedy. We want to take advantage of the greed while it's growing and then get out of the way. So this is going to be a heat map target of 72. Okay, take this guy off. That's our plan. Let's go to the next one here. 2 more to go. Frog at 37.5. Frog is such a goofy name for a stock. Let's add this. And we got in frogs at 43.63. Our opening one was 43.63. So for those of you who are still here, I want you to know I'm really proud of you. First, this was a ton of work that we did. And I'm not just proud of you for watching. I'm proud of you for paying attention. I'm proud of you for learning. Because once you understand this skill set that we're showing here, you can have generational wealth, right? Now, it's easy for me to say that because I know what it's like to make money. But if you're not, you hear somebody talk about like things like that and you're like, oh, another scam artist, right? Dude, I love to do this. This is the love of the game to me. This is why I'm doing it right now. What paywall did you have to pay to watch this? I don't think you did at all. Right? I love this. And if you're going to be successful at this, you have to put in the effort. You have to put in the work. And if you've watched this far, you're seeing all the work that goes into it, right? You see all the work that goes into it. All right, heat map is at 62 here. So our exit point will be 72. 72. Okay, throw this over here. And here's the deal. I honestly, I could lose on every single one of these. I hope you understand that. Every single one of these could be a loser for me. It really could, because I don't have an expectation on these trades. That's why I set my risk the way that I did. But I would bet more than one is a winner. I would bet at least more than one. I don't know how many. Hopefully all of them. All right, let's do PayPal last. No expectations, precisely. Don't jinx it. Barry says, Chris is a professional trader, so he could do this in his sleep. Yeah, exactly. In fact, I could do this with both hands tied behind my back, blindfolded, hung upside down by my pinky toes. That's how I could do it. All right, so this is at a fear and greed heat map of 53. So remember, we're giving it a 10-point spread. So this is PayPal, right? Yeah, this is PayPal. So let me go ahead and type that in while we got it here. Heat map exit was 63. Yeah. Heat map exit 63. Then we'll go mark up the chart here real quick. So this is today. Now remember, I'm giving you an opportunity to ask all the questions you'd want to know about these trades we put on here in just a moment. So go ahead and type those in as we're talking. 73.19 is where we got in. 73.19. $73.19. One of my little helper lines here. FATR below. Remove this line here. That was the low from the previous day. Remove FATR below. 1 ATR above. And another ATR above. Okay, there we go. So now I'm done marking up my charts. I know where I'm going to get out on all these, right? I want you to tell me in the chat right now as you're watching this. What word can we type in the chat to know that we know we're going to get out? Let's say smart. Type the word smart because you're smart. You understand that you can't fake this game, right? So many people on social media want to brag about all their great wins, and we know that they're not doing it, right? We know that they're full of crap. You aren't. You're actually putting in the work, okay? Trading is not just clicking buttons, right? Any monkey can click a buy button. Any monkey can click a sell button. But those monkeys are the ones who are going to get monkey hammered, okay? You aren't like that. You are different. You are an outlier. And because of this, you are planning your trades so that you can be on the right side of them and out of the way before they start hurting you, okay? So now is your chance. Let me go through and start answering questions, help you out as much as I possibly can. I'm scrolling up first, all the way up to Laura's, my first brain surgery. Let's see. Okay. Thomas, my risk is 2.5% on each trade, which is what I can handle at the moment without becoming stressed. Did try 5% a few weeks ago and didn't like it. Dude, that makes total sense, right? That makes total sense. If you do eventually want to scale up your account, start at 2.5%, start at 1%, and then get used to it. And then once you're used to it, bump it up by 1%. Going from 1% to 5% or 2.5% to 5%, that's a big jump. That's a huge jump. And honestly, that can be very detrimental. If that first trade at your new position size, Mikey Mike, one of our OVTLYR U students, had that happen to him. His first trade at his new position size was bigger as a loss than all of his winners at the smaller position size. He didn't do anything wrong. He did nothing wrong. But when he position sized up, that loss was way bigger than he was anticipating. It's all fun and games when you got the winners, but it's when that loss comes through and you aren't ready mentally, not mentally, Mike, you're awesome. When you're not ready to see that loss and to see all of your wins get wiped out on a single loser when you did nothing wrong other than follow your plan and it just happened to be the loser, right? So you guys are smart and you are sizing up correctly. Scott says, do these get saved when you mark them up, or do you just leave the tabs? No, they get saved. They get saved to my profile. It's a sticky profile here. Let's see. I'm scrolling down here looking for questions that I can answer. I want to help you guys out in every way possible. Hopecast says, that was stressful. My heart's still pounding. Nervous of the outcome. And I shouldn't be, but I can't help it. What are you nervous about? What are you nervous about? Would you be nervous when you're driving from Dallas to Disney World when you got the map? You got your GPS set up on your phone? Probably not. Unless your car's a beater. Unless your tires are bald. I would be nervous then. But if you know which way you're going and you know where you're going to exit, exit says the happiest place on earth, this direction. Boom, you're good to go. Barry says, do all brokers offer a credit for rolling up your options? I'm on Fidelity, and it's not clear they provide a credit for doing so. Thanks. So that's an interesting question. It's not that the broker offers you a credit. It's that the trade price is going to result in selling to close one, buying to open another one closer to the money. And I mean, I without knowing your platform, I can't really say what to look at to look for it. But it should somewhere say credit when you do that. And it's not that the broker is allowing it. It's that that's what the prices are, right? That's like walking into 7-Eleven and saying, you know what, I want this one, and I want to return this one and get this one instead. I want to return this piece of gum and get that piece of gum, right? It's not that the guy behind the counter is like, oh yeah, sure, here you go. But it's the prices are different, and so they are obligated to make sure you get those prices. It's a really good question though. Let's see. Which videos in OVTLYR University explain the basics? Well, if you want the basics from OVTLYR University, I got news for you. We cover it all the time.
Are you ready? Let's go!
Respect is earned. Respect is never given.
That's right. Every Tuesday and Thursday afternoon when I'm not on vacation like I was last week, and like we're going to be this coming week as well for July 4th. Other than that, other when Chris is not on vacation, we are going through OVTLYR University. I'm teaching you everything that I know. Yesterday's OVTLYR University, which should have come out this morning as a replay, went through options trading basics, and boy, was it deep. Those basics were deep AF, and tomorrow is going to be even more deeper. Like we're going to go into super heavy options theory tomorrow. So I hope you're ready for that. That'll be tomorrow afternoon, Thursday afternoons, Tuesday and Thursday afternoons here live, and then the replay will be the following morning. None of you. Thoughts on BBAI and BitDeer? Is BBAI worth the buy under $4? I don't know. I'm the wrong guy to ask for that. Reason being is that I'm just looking at the charts. I'm just looking at the data. I mean, what is it worth to you? I have no idea. If it fits your trading plan, go for it. If it doesn't, it's just noise. It's just noise. Dave says, I thought I was ready. You make it look easy. I'm trading 3 accounts and it was overwhelming. Yeah, dude, trust me. If I didn't have to do this live, it would be a lot easier. But balancing doing it live plus my account plus a family account, it's definitely a lot of work, right? But is this not the greatest job in the world? I would have to say it is. Paul says, took a lot of screenshots to record the trades. And Alex says, how do you calculate for ATR again? Okay. So it's not that we are calculating for ATR. ATR is provided to us by the broker or by your trading platform. Let me move everybody out of the way. So down here at the bottom is where my ATR is at. So ATR is the measure of the volatility of a stock. And let's look at a couple of different stocks, right? Here's PayPal. Oh, PayPal round tripped like Tesla did earlier, huh? How about that? So you can see here, the volatility in PayPal was pretty low, around $1.90. So this is the average move over the last 14 candles. And then it popped up it had a low of $1.39 up to $2.19. And then it pushed higher and higher and higher and higher and higher and higher until it reached a peak right here of 335. Now that volatility is down at 195. So because we can measure this volatility, we then translate that into our position sizing because we're trying to trade risk first. And in this formula here, when we add ATR as the denominator here, This allows us to have a consistent sizing of risk across all of these different stocks, right? I still have this open? No, hang on. Let me go to my position size calculator here and I'll show you something really cool. Here. Check this out. This automatically calculates this for you. This is the total risk to your portfolio. And look at that. Every single stock has the same dollar risk, the exact same dollar risk on every single stock. Some of these stocks are $72. Some are $500. Some are $40. And some are $700. But yet the risk is consistent. And that is why ATR is so invaluable, right? You can't do this if you're just saying, okay, I'm going to buy the same number of shares or same number of contracts on every single one. It's impossible. But when you consistently position size based on risk, that's when you can figure out how much risk you're willing to take. That's when you do that. Ahmed the Sultan says, I'm copying all your trades with stocks, not only options. Only not options. Okay. I will learn fully from the classes. Outstanding. Outstanding. Don't worry about trading options, man. If options aren't for you, it's okay. It's totally okay. Ben says, this is the best show yet. I appreciate that. Alberton says, this was high intensity trading. Yep. Sit in cash and don't F up and then go big and hard giggity. Cody says, that was awesome. We are set up. Francis has a question. Is it harder to make money with cheap stocks under $20? I noticed that my 80 Delta call options with 200 open interest rarely moves when the stock moves. Interesting. So if I've been rereading this book lately. One of my all-time favorite books. Actually, it's over here. I pulled it out this morning. This book right here. This is called Market Wizards. If you don't have a copy of it, it's amazing. Go grab a copy of it on Audible or a paper copy. In fact, when I was listening to it, it was so cool because I was mentored by some of these guys in here. One of them who I was not mentored by was David Ryan and William O'Neill. Two of them, I should say. David Ryan and William O'Neill are both big in the Can Slim, the Investors Business Daily world. I believe it was David Ryan who, what was the question again? Oh yeah, the $20. I believe it was David Ryan who, when they asked David Ryan about low price stocks, he's like, yeah, they're low price for a reason, right? It kind of makes sense if you think about it that way. They're low price for a reason. Page 237. I don't know if I can find his quote real quick. Let me see if I can. 237. David Ryan. Let me see if I have any notes saved in here for David Ryan. Oh, yeah. Check it out. That was so easy. Page 242. Let's read it together. Is that a good rule? Avoid stocks under $10. Yes, because they're usually down there for a reason. Doesn't that knock you out of a lot of stocks? Yeah, there's lots of them. But aren't those sometimes the best buys? The stocks that no one is paying attention to sometimes, but many of those stocks can stay down there for years. And I would rather wait until they prove themselves by moving up, for this example, to the $15 or $20 range. Where is he trying to? Okay. Point is that a dude just said it right there in black and white text. Like, they're down there for a reason. They're cheap for a reason. Nobody wants these stocks. They're garbage stocks, right? We looked at one this morning called Teladoc. You probably have heard of Teladoc, right? Did you know Teladoc in 2020 was a $180 stock? Today in 2025, it's an $8 stock? That's because nobody wants it. That's because nobody wants it. So I avoid anything under $20 because nobody wants them anyway. Let's continue on here. I hope you guys are enjoying this. Looking for questions. Like I say, be sure to put the hashtag Q. It really helps me as I'm scrolling through. ASML looks fine on the NASDAQ, but it has order blocks on its primary domestic exchange because of the falling dollar. I don't know. I'm not looking at that. But if that works for you, Eloy, go for it. The only chart that I see of, what was that again? ASML. The only chart I see of ASML is this one. That's the only one I see. That's the only one I look at. That's the only one I'm going to look at, right? It's going to do what it's going to do, and all I can see is what's presented in front of me. But if you are concerned about that, if this fits in your trading plan, I would say add that to your trading plan, but be consistent. Eric says, can you go over why you have different levels of getting out of the heat map exit? Very good question. Okay. So let's zoom out slightly. This is PayPal here. One thing that I observed anecdotally is that the further up this goes in the greed, the more likely it is to snap back. And that's what you see right here. It went up really high and then it snapped back down. Went from around $72 to around $69. Not a huge snapback, but it did snap back. Okay. And then again, it went up super high and then started to come down in greed. It didn't quite snap back, but is what it is. Went up super high and then it snapped back. It went up super high and then it snapped back. Now the same can be true on the downside, right? When it gets super fearful, it can snap back. When it gets super fearful, it can snap back. When it gets super greedy, it can snap back, right? That's the Uncle Warren quote, right? When investors are greedy, be fearful. When people are fearful, be greedy. Outlier shows you this data on every single stock and in the sector. It makes life so much easier. So I'm looking to run it as it's rolling up, but I don't want to press my luck. I don't want to press my luck. So what I did was I ran a lot of back tests to come up with these numbers here. And when it's between 50 and 75, giving it a 10-point spread was very consistent. When it was over 75, giving it just a 5-point spread was very consistent. And then the thing that I found with 63 is that any fear value could actually run up to 63. Pretty crazy. But that was where when I ran my back tests, I saw, okay, where was the highest stock price during the time it was open? And it was consistently averaging at that 63 level. Sometimes it's at 60, sometimes it's at 66, right? Somewhere in between there. But that's where that came from. Great question. All right, lots of people being smart. Nico says, or Inkari says, Cisco looks to be in an order block. Is that not the same for you? Let's see. CSCO. Not appeared. This is on the daily chart to be in an order block at all. It looks beautiful. I don't know where it's going, but it looks like it's going up from here. Kind of wish I bought that one, but I didn't have enough money left. Okay, let's keep it going here. Let's keep it going. Check your heat map scoring for Celsius. I mean, I could have typed it wrong. Let's go see. So we just talked about that spread a moment ago. Let's see Celsius here. Shows the heat map value of 68. Oh, maybe I did type that one wrong. 78. No, there we go. 68 up to 78. All right, cool. Trust the process, right? Like driving from Dallas to Disney World. Ooh, clever. Instead of smart, Sunny went with clever. I like that. I have carpal tunnel from filling out my portfolio manager. Oh yeah, I need to do that too. Be sure you keep all your notes. Mofo says, can you show the exits for Cisco for those of us who did buy it? Sure, we can go over that one. That'll be the last question of the day. This is close to rocket surgery. All right, so let's imagine that we put on Cisco here. All right, let's imagine. So the same half ATR and all that would apply here. All right, so imagine you go in here. There, your half ATR down, stop loss would be around 67.65. Your 1 ATR would be 69.26. Your 2 ATR would be around 70.35. And on Cisco, the heat map score, Palandry says, can I just wake up in a few days with a 50% gain? You could. We'll have to see, right? But you always got to control your risk. So it's at 69 on the heat map. So that exit would be at 79. Now, here's the deal. I can guarantee you tomorrow, if any one of these are down in the Discord, people are going to be freaking out, losing their minds. Like, oh my gosh, have you seen this one stock is crashing? Just wait. It's going to happen. All you have to do is know where you're going to exit. Okay, remember, focus on no expectations. Focus on your exit points, know where you're going to exit, and then just let the market run. Cut your losers short, let your winners run out of control. And if you're ready to save time, make money, and start winning with less risk, click one of these two videos. Thank you guys so much. I will see you tomorrow.